What's up, everybody? Let me make sure this is working. All right, cool. All right, so hope everyone had a good week. Last week we discussed how I was wary of buying up here and to look for this 46.96 level to trade again, sooner rather than later, mainly because this is the breakout point, right? It's fairly simple. I said if we continued to rally, that's fine. Just, be aware that we were going to come back and we were going to see that area trade, sooner rather than later. And while I couldn't give you a date, because of, all of this information is very low volume, I just knew that it was going to happen, right? It was a pretty obvious trade, guys. All right, so what do we got now that we have a little bit more information, right? I've said it a couple times, like, hey, we're gonna need more information to figure out exactly, like the long term movements of the markets here, right? Why did I say that at the beginning of last week? And the answer is pretty simple: is we had a major breakout, right? So if we, there's a lot of crap on this chart here, which we're gonna go over here in a second, but if we take this date range from the first day we started trading up here all the way to now, we're looking at 43 trading days, guys, 63 days. All right. This is a major area. Okay. Now, what happens when you start trading this long in an area? All right. I mean, it's one of two things, right? Either realistically, it's really only one thing, right? You only trade this long in an area if you're doing some sort of accumulation or distribution. Okay? When you're making new highs, this is what you're doing, right? Let's go ahead and look back here, right? What happened here, right? Here we trended up. What do we do here, right? Like we can do a range. Like we just go back in time here and pick any amount here, right? So here's a 5% range, and we went sideways for boom 23 days, right? Then what happened? Made some new highs. Then what do? We went sideways, right? Made we started trending it again. Then what do we do here? Started going sideways again. Sold off, went back up, sideways again, same area, right? How long over here? 46 days. Okay. Then what do? Went up, new highs, right? Made a new low, went back down here, did a correction, went back up, sideways, 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 new high, correction, trended back up, right? Went over here, did a sell off. Now what's going on? But ultimately, what's going on here? This whole area since November 4th, if we take the price range from here, right, from November 5th, we've managed to go up from the November 5th high. Keep on that. That's 2 months ago, guys. Okay? Today's what? The 7th? So 2 months ago, from that high, we've gone nowhere. We've gone up a whopping 2.36% higher while selling off at the peak 4.5%. Okay? So we've done nothing here. Right? In terms of, like trending move, while it's been action packed, don't get me wrong, it's gone down 4%, gone up 4%, gone down 4%, gone up 4%. We've done essentially nothing. Okay? Now, why am I bringing this up? I'm bringing this up because, again, we're at a point where we've gone sideways, essentially. We're trading at the same levels as November 5th for, 43 days, 43 trading days. All right? That's a very long time. You know, we just went back and we looked at how long, you know, you accumulate positions. Generally, when you accumulate positions and you're going on a leg higher, you know, that's like a 10 to 15 day thing. All right. And then you move. Then you go higher, right? You know, you go back in time, take a look, right? You come up here, you start going sideways, 10, 15 days, boom, you go higher, right? You just go take a look. That's just generally what it is, right? You 10, 15, 20 days, you go sideways, the sellers sell, the buyers buy, next leg higher, all right? Well, we're going on 43 days now of basically going nowhere, okay? So what does that tell me? Well, that tells me that this is not a accumulation phase. This is likely a distribution phase, meaning people are getting out of the markets. People are selling their positions, right? What's some more evidence that we have that confirms that? Well, you know, billionaires are dumping stocks at their highest rates in years, right? You know, like there's all sorts of statistics, I'm sure we can find it, that show them just dumping stocks nonstop over the past few months specifically, right? You know, going back to November, really, at record levels. Okay, so why are we talking about this? Well, we're talking about this because today we closed back at 46.67.75. Right now, if you look, we added this line, this 46.67.25. You know, I don't even know when I had it here, but it's been a level on the chart for quite some time, and we closed just above the 50-day moving average, right? Actually, we might have even closed it a little below it. All right, so we closed below the 50-day moving average today. All right. What did I tell you last week? I said if we, you know, the resolution of this move, this chop session here, was a low volume impulse higher to the upside, and that if we came back in here and we had two daily closes below, that we're in some serious trouble. All right, so you know, let's start talking about that. So I just explained to you how we had what's likely the reason we're going such a long period of time up in this area is it's likely distribution for a major sell that's likely to come, right? The question now is really, all right, do we have one more final impulse higher, or do we just sell off from here? Okay, so let's get into this. Let's see the evidence for either or. All right, so first and foremost, if we take a look, let's take a look at some of these volume profiles, right? Here's the volume profile that we've got from this major low on October 6th up to the major high on November 22nd, right? Before we started the 2% daily moves, right? That's this structure right here. You can see that's where we came up with that 96.25 point of control sort of level that is so important. This next structure here is the entire, you know, where we're moving 1 to 2% every single day, leading to the breakout, right? First day of the breakout here, right? Again, what does it tell you? It says that the top of this value area, 46.99, point of control of this entire up move, 46.96. You know, just more evidence to suggest that this is, you know, this upper area is the absolute most important area, right? Let's increase now this volume profile fixed range from where it started the 2% moves on Thanksgiving, and let's increase it all the way over, right, including to today's sell-off, right? What do we get? We get the same level. 47.02 is the utmost important, right? This is the top of the value area where 70% of all shares were traded. You know, 15% of the shares were traded up here, 15% of the shares traded down here, right? Again, more evidence that this 46.96, 47.02 area is just the most extreme area. You can be bullish on new highs above, and below, back in this area, you got to be really, really cautious, because it's saying that the bulls have failed, right? All right, so just again, the from here to here, it's telling you that we actually closed below even the point of control today, which is the most shares traded at 46.8250 from this whole zone. Like, we closed significantly below that at 46.6775. All right, so let's just go ahead and get rid of this for the time being. All right, so what do we got going on here? All right, there's a couple possible scenarios here right now. Okay, this breakdown here, this is extremely bearish. There's no other way to really explain, this sort of behavior. Okay, we had all this chops, this whole chop session. This move expressed itself to the upside, and has failed and has fallen back in. All right, so why do I not just say, hey, mortgage the house, sell short, right? Like, why don't we go all in short here, right? When, because just last week I told you, hey, this is, once we start trading down here, we're gonna implode, right? And I still think that's gonna happen. Don't get me wrong, right? As long as we are below this 46.96, I think that we are in serious trouble in these markets. All right, but why do I think in the short term, that I think that the bulls might do something here. I'm about to explain that to you. If we start diving into this structure, this low volume structure, right? Here we can take this week's point of control, this week's volume profile from January 3rd to today, January 7th, right? We've got some really shitty structure hanging out here. All right, and this also ties back into the run here. So you see on these two candles, this specifically, I'm going to be talking about this candle here and this candle here, where we trended very hard. We trended hard down, we trended hard up. All right, and then what happens here is we've got this little gap between these two. Right, so you've got a day where we just went up on no volume, and we got a day where we just went down on a bunch of volume, but none of it was traded in this area. Okay, this is poor structure. All right, so when you take a look at this whole chart, okay, the poorest structure on this chart is this little block from 47.50 down to 47.18. All right, and why is that? Well, that's because we spent the least amount of time there, and we also traded the least amount of shares there. Okay, so whenever there's poor structure like this, and again, you can generally see this when you see a huge up day making a new high, and then shortly later you see a huge down day making a low, and we trade well below that, right? There's basically information in here that the market doesn't really know anything about. Whenever the market doesn't know anything about something, it tends to gravitate back towards that area. All right, I don't know why. I'm not going to sit here and get into a philosophical debate about why the market does this. It just, generally speaking, when there's an area that we didn't spend a lot of time at, and a lot of shares weren't traded at, that's what you can call quote unquote poor structure. All right, and poor structure tends to get repaired, just like gaps tend to get filled. All right, so this is poor structure here, guys. All right, I just explained to you how I came to that conclusion. Now, what does that mean? Well, that means that at some point, this has got to get fixed. Okay. Uh, like it could get fixed 6 months from now. It could get fixed, 2 days from now. But just like I told you, the market has to come back to 46.96, the breakout area, and see how that area trades. And if you remember, we were talking about how I was looking for a continuation downwards, and if we had just continued selling off immediately on Monday, we'd probably be having a completely different situation. But instead, on Monday, what happened is the market kept on going, and what happened? Well, we went right through it, just like butter, just like I told you. I said, if you were a bull, you wanted to see that test on Monday. You wanted to see it come back and test that immediately, right, and see that confirmed, and then we wouldn't be in this situation, right? But it didn't. The bulls continued with the divergence, pushed it higher. Bears took control, and now we closed it, and the market's in a much more dangerous place. All right, but so what do I see now, right? Okay, so we closed pretty much right at the 50 DMA. We closed above this 46.67.25 by 50 cents, which was another previous critical level. The purple line now I've added is 46.86.25. This is pretty much the new, just like last week, the hey, bullish above level was 47.71. This is that new level. Above 46.86.25, you can favor longs going into next week. And what I'd like to see, and what I'd like to see on Monday, maybe even early into, maybe even into Tuesday, is a run up from here to clean up this structure. All right. And the top of the structure value is 47.50.50. Okay, so I would like us to see some. So here's some interesting areas, right? You've got this 47.16, which is the top of this this Thursday's candle, as well as the low of the big run, right? I would say that that's sort of the minimum of what we'd want to see. But realistically, I would want to see this cleaned up, right? I'd want to see 47.50.50 trade. Another interesting area is 47.40.50. These are all very compelling areas to, for on an intraday basis. But for me to take a swing short, the new ideal spot is 47.50.50. Okay. Now, just like I told you on Sunday, before we started moving up, and I said I would be really careful, if you were long, because we got to have this 46.96 test. I'm going to go ahead and extend the same warning. I would be really careful short here until we clean up this structure. So if we can get another push up to like 47.50.50, that is going to be but again, this is something that needs to sort of happen on probably Monday, maybe Tuesday. That's because it's a lot to ask. That's almost 100 points. We're looking at almost 90 points here. If we could get that by Tuesday and clean up that structure, we then have CPI hitting on Wednesday. That could then clear the way to some serious downside in the markets here, right? And again, below this 46.96 is extremely dangerous. All right, so it is not out of the realm of possibility that the markets continue imploding here. But what I'm telling you is that if we continue to go directly down here That's not an ideal situation to get down here to 43.2750 because we have structure that needs to be cleaned up immediately above here. Okay, that's my point, right? These are like gaps almost. Like this needs to get filled, and it's better to fill it up here when we're close up here, uh, because then we can just do the full move down to here with no problems. All right, that's my point, right? So if we start selling off, directly on Monday, uh, that's great. It's great if you're a bear and this and that, but like, then this is probably not going to trade. Okay, which is what really I'd like to see. Okay, so, in an ideal world, and what I think is going to happen is I do think that we're probably going to get a rally on Monday and Tuesday, and we're gonna rally back up. We're gonna at the very least probably on Tuesday have an intraday fill up to this 47.50.50. Again, that's what I'd ideally like to see, and probably sell off, right? So if we rallied all day Monday, we closed above maybe this 47.16 on Monday. Um, then on Tuesday, early in the session, perhaps we could go ahead and run on up by 10:30 a.m. or something like that, up to this 47.50.50, and then begin selling off from there. And then Wednesday, at that point, again, if we manage to close back below this 46.96 area, it's game over. Game over at that point. This thing is going to sell. So the only thing that really keeps me, guys, from saying, hey, we're going to absolutely implode here and go trade 43.30 like I was looking for, is just the poor structure. Unfortunately, we went too fast on both occasions traveling through here. And traded too little shares, and that stuff needs to get cleaned up. So I do think that there is a possibility that we rally Monday and Tuesday. If I'm wrong, I'm wrong. If I will say that if I'm wrong, that if we do continue to sell immediately from here, then I don't think we're gonna get that 43.27.50 anymore. That's what I think the consequence of that is, right? But if we rally and we clean this structure up a bit by Tuesday p.m., then I think that this is a really, really good spot to go short. And that spot would ultimately target, way lower. Where's the 47.50 here? So 47.50.50, I think. Excuse me. I think we'll get that, right? I think we'll get that 8, almost 9% pullback from that level. And we'll probably get it by the end of the month. So that's kind of where I see things. I'm short-term bullish here. Not that crazy bullish. We're looking at about 80 more points. But again, this the key level remains 46.96.50, 4,700. If the bulls reclaim that, let's say on Monday, by maybe closing up near 47.16, then 47.50.50 should trade on Tuesday, and then that's sort of going to be the really big, the big spot where you'd want to kind of load the boat short. And Wednesday CPI comes out and markets get spooked, and this thing implodes, right? But again, that's really going to be 46.96.50. If this ends up trading and we can't get back below 46.96.50, that's it. This was the dip, and we're going to continue to 5K. All right, but just my personal opinion, because I don't think we would come back and close 2 days below here if we were not going to have more downside. That's my personal opinion, right? So while we may go back up here in the short term, I do think that it's more likely that 43.50 will trade, 43.27 rather, than 5,000 at this point. Just my personal opinion. And we'll see how that happens. So I hope I laid that out well. And hit me up if you guys got any questions.